a portfolio approach. An active manager, an active investor is not necessarily taking a trade every 30 seconds like a day trader or a scalper might do, but an active investor is regularly checking back in on things that they're invested in and saying, do I still want this in my portfolio? And if I don't, I need to cut it out of there, right? So that's the difference between being a passive long-term investor and an active investor. Active investors are constantly watching their holdings and administering whether they want to keep them there or cut them out. So in just a second, we're going to take the stream to our next host, Chris Pulver, who, by the way, we've got a membership sale that just kicked off. We're doing 35% off everything in our VIP membership sale. So you can currently get 35% off of our VIP signal service. If that is something that you're interested in here, we're about to take a quick commercial break. Send us a direct message using this link right here. Let us know you saw this stream and that you want to get 35% off of our VIP memberships, and we'll give you some information on that. Also, if you're a fan of the show, Chris Pulver's signals are also 35% off for this very limited period as well. We're doing some sales to kick off the New Year's. Got some New Year's discounts for you. We're going to take a quick break, guys, and then up next, Chris Pulver is taking over the show. Stay tuned.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Busy Monday, and just want to take a look at a little bit of everything. So I'm dealing with some assignments. Had to spend the first about 35, 40 minutes of open today resolving some things. So I've got one account that I'm still waiting for a settlement. I had a credit spread that was assigned in the SPY over the weekend, and I had to get into the accounts, settle in some long puts, settle in the shares, and I'm opting to not keep the shares this time because just taking a look at where we are at. Here is the last few weeks of trading. So we have our all-time highs in the S&P. Let me mark this in black. So we have all-time highs in S&P, retested but failed. Now we're coming into holiday trading. There's your FOMC smash, the PCE low, the holiday retest. That was your Santa rally right there that faded hard. Retested the same low, came all the way back up to the same level and area again, and then we got through another rejection. So we're sitting here just below the PCE lows and just below the holiday lows, and it looks like, oh my gosh, this market might be. Yeah, it might be. It might be fulfilling a head and shoulders pattern, right? So we have this low and this low. If this is a head and shoulders pattern, there's two ways we can measure this. I've already measured it. We've already talked about this. This is weeks ago, okay? But I measured out a potential symmetry level, which would be my high to low right there. And then you have your lower high to lower low. Okay, so that means on a symmetry correction, there's not too much further that the market would go lower. Like literally today's low is pretty darn close to in symmetry. Maybe that's enough. Now, the scary part would be, okay, there's potentially more downside potential if this market is going to fulfill a head and shoulders pattern. You take the high to low, and then you get a break of the neckline, which would be today's pricing based on the little flirtatious move on Friday, breaking the neckline. If we break the neckline, this would be the SPY measured down to around 553. Okay, 553. Now I said like 550 to 560 would be like a nice little head and shoulders window, or I said around this 575 zone to fill the election gap. So there are two levels right in here. We've officially closed the election gap, and the question mark is, are we going to go down to fill a head and shoulders pattern? If this market snaps back up and gets on the right-hand side of this trend line that I draw right here, then I think we're putting in a near-term bottom. So this could be like what looks to be a head and shoulders, but doesn't actually materialize to sell off any further. Okay, so it is a really important spot to watch for today and for this week, because tomorrow we have PPI data. Wednesday, we have CPI data. If you remember what happened last time we had CPI data that the market really reacted to, we saw one of the biggest intraday moves that the market has had in like decades. Okay, it was like the Qs went like 1.8% lower and 3% higher. The SPY went like 1.5 lower and 2.5 to 3% higher, all in the same day. That was during a CPI event. Okay, so we could get a lot of crazy crap happening this week. So buckle up. All right. So we have a nice little pullback from the all-time highs. We're down about 5% or so on the SPY, but down about 5.5% on the SPY. Okay, Qs are down, I think, like 6 to 7%. So we're down about 7.33% on the SP or the Qs. The Dow has been, beat up worse than the others. Percentage-wise, it's probably not as bad, but it's been the worst as far as directionally. This is down 7.3% as well. So the Dow's down 7%. The Qs are down 7%. The Russell gave back all the election gap candles and then some. So this is your election gap. Russell has continued to push lower. This one's in double digits as far as correction goes. So the Russell is down about 12.7%. All right. So index wise, I mean, Russell is the more discounted index. My concern is that, do I love small caps right now? Not really. For income trade, sure, but not for not for long-term investing, I don't think. We'll see. Anyway, so there's my SPY. You can see the trend line I just drew. I just connected the dots on these recent highs. So this high, this high, this high, right? If you want to be confirming that we're kind of putting in a low, I would wait for this trend line to break. Okay, if we head lower, that's fine. I've got my measure move towards my head and shoulders pattern. So I'm going to put this on my chart. This will be a head and shoulders measured move right there. All right. So I'm going to keep that yellow box on my chart. Today, we officially filled the election gap in the SPY. And today we are getting closer to filling. We're not quite there yet. This is the election gap on the Nasdaq. There's the election gap on the Nasdaq. We came very close to filling it right after the election, but we had proceeded to go to all-time highs in the Nasdaq. So if we're technically going to fill all the way, okay, all the way, then we still have a little bit further to drop. This would not necessarily be measured like a head and shoulders trade. The Qs are acting a little bit differently, but I would say the Nasdaq would be maybe some symmetry correction somewhere in here. So if I go from high to low, look at that as a little swing. We go to symmetry, we're hitting that today. If we go from, I mean, that would be about it. I mean, if the market's going to, kind of measure this as a head and shoulders and call this a neckline, then we might have the Qs not only fill the election gap, but get down to like 480. So put like a 480. So head and shoulders measured move would be around 480. And I don't know if we're going to get there or not. We might. But again, if you zoom in, take the trend line break, let's see what price does this week. Okay. If price proceeds lower, then we're having this conversation on markets looking to fulfill the measure move. If we have price, rip back up here and find a gap and get into the right-hand side of this trend line, then you can look at the market putting in, a near-term bottom, maybe right side of the trend line confirmation, and then there's more room for the bulls to head up. But you can see there's lots of hurdles now for the bulls to overtake. We have gaps that the bears have been creating. So we have this gap for the bears that have been created, this gap today that the bears created. The bulls, even if they pull back, there's a lot of structure in here now that I would say, man, unless the Qs get greater than 515, I'm really not that bullish on it right now. That makes sense? So I think if we have more of a discount, I get a little bit more bullish into my deeper exponential moving averages. So here's the Nasdaq on the daily. Okay, you can see that structure I talked about the last week or so. That low is breaking, that range is breaking. Now that we're safely below that, do we fall back into the 144 to 200 moving average? Okay, there's an election gap fill at 492. Do we fall lower than that and actually come and test the structure? Look at my previous lows. Okay, we had support here. We had support here. We had an August 5th bottom there. We're pretty well supported in these dynamic moving averages. Now, if we come back to the 200 moving average, I am pretty interested in a bullish trade. If we come back into this structure that would basically be like support through the August 5th low, it'd be a little bit lower than the 200 EMA, but man, that would offer up a really healthy, like probably 15% discount. Yeah, that'd be like probably 15, 60% pullbacks. Now, is that enough to say I want to get long the Qs? I mean, it's enough to get long on defined risk, because if the market is going to put in a near-term bottom, and if there's, look, I'll say this, if there's any way that the Nasdaq is going to carve out gains this year, right? We started the year right here. So if I put in any trades and by the end of the year we're back into positive territory, that gives me some upside potential to put on some risk, right? So if the market is going to finish for the year positive, then I'll just put on some trades, right? But timeline wise, I might consider going out to like the end of the year. I might not fudge around with like a 30 to 60 day move. I might go out and just say, look, I'll go out 9 months. I'll go out 12 months. I'm just going to put in a trade out 12 months. And maybe that's, it's not a lot of income up front, but it's a safer play for the timing. Does that make sense? All right. So, and look, if you are like not enjoying this little, 7% correction, 5% correction, then you're trading way too big and you're way too leveraged, because for this, we've been waiting and wondering, will this happen? And this is maybe just getting started. I think it would be an easier trade to position yourself for 2025 if this market is down, let's say, 7 to 10%. If the market offers that as a discount, that is a good way to get started, to have some decent upside potential to claw back that 7 to 10% and get into positive territory. That's a pretty easy trade. But if the only way you make money is if this market goes higher and higher and higher, then you need to learn how to trade different, because we're in a phase where after having a 2.5-year bull market, after a 15-year bull market, you got to be able to look at this and say, there's room for this to fall. I hope that it does. If this is going to continue to decline a little bit, fine. Okay. But there will be forces in the market that will start pushing this thing higher when the dust settles this week. Let's just make a note here. Today is Monday the 13th. Okay. When the dust settles on Friday's close, where are we for the week? I don't know. Are we going to be lower or are we going to be higher? Would anyone be surprised if the market like spikes down here and then spikes up here, and then we end up showing some positive gains going into like the next maybe 2 or 3 months? It's very possible, right? So it's just one day that leads into another day that leads into a weekly candle that leads into where we're looking like things are going. But I think an easy spot to look at would be this. If you're waiting to get a little bit more bullish, a trend line break would be nice. If you're waiting to get a little bit more bullish, a trend line break would be nice. Be aware of these measured moves. So the SPY falling back to around 555 to 552. I'll put that on this note here. So we'll say 555 to 552. Okay, and then the Qs measured move would be around, I'll go like 480. I'll go 483 to 480. $483 to 480. Okay, now I can be like super exact and say, no, that's the measure move at 479.98, whatever. Obviously, within like a dollar or two, I'm saying that's pretty close, right? Because price can come in and like spike that level, but I just kind of want to set some chart alarms where if it's close enough, then I might start looking at some defined risk trades in my options positions. Okay, all right. So we got that going. Anything happening, and we'll just go top down here. I do have a hard stop this morning at 11 a.m. Okay, so I'm gonna wrap things up here in about 28 minutes. I've got another class at the top of the hour, but I want to go through everything else. Let's take a look at currency strength. Currency strength on the day. Surprisingly, there's not a ton of volatility. Japanese yen showing some strength this morning. The Swiss is a little bit softer. Euro and pound are down as well. Japanese yen a little bit stronger. That's about it. So I'm not crazy impressed with the amount of volatility in Forex. There's not a bunch. So it's kind of I'm not going to say a nothing burger, but I'll take a look at some of the currencies in a moment. What else? Volatility is up today. So we gapped higher in volatility. Don't be surprised again to see volatility being sold. It's a mean reverting instrument. So if we have a gap higher and it gets filled this week, we might be putting in a near-term bottom. I'm just just be cautious. Like, we might flush down on PPI or CPI, and the market reacts and bounces off that, uses as a catalyst to kind of rip and fill some gaps. So if we have like a big move on CPI, PPI, and VIX spikes up here, I'm probably selling some volatility. The one thing I could do would be maybe I was gonna say I've got some puts in here. Let me see what this SVXY position is. Let me double check something here. SVXY. They're all done. They're all profit. Okay, so I have zero exposure now to SVXY. Okay. I might buy some shares of this. Maybe. If I buy some shares, let me take a look at this. If I buy shares right now, I don't think it's a good enough spot. If I buy shares, I'd have to put in a collar trade. Let me see what that would look like. If I buy shares of SVXY and I pair that, come on, man. Why won't this account close? I've got 2 contracts I need to fill on this account. All right, let me take a look at this. So SVXY, if I buy the shares at 47.32, let's say I go out to the end of February. So I buy at 47.34. Could I sell? Premiums are not that great. This is probably the only deterrent of not buying the shares and adding options on it. If I buy the shares and I sell, you've got to be kidding me. These put premiums are off the charts right now. Yikes. Okay. That trade's probably not going to work then. I was going to say if I do a collar trade, if I sold a call here and I bought some put protection, it's going to cost me a lot more money. Plus the bid mid ask is like really, really wide. If I went out, that's up $1.70. Even if I went out like $3, I mean, I guess I could get a credit for it, but I don't like it. I'll pass on that. Usually, if we have like a big spike in volatility, so when the VIX spikes up, I'm usually looking to buy SVXY or SVIX. I like SVXY a little bit better. Okay, so if this spikes higher, I might take on a quick position in SVXY. But this also might revert and put in a near term. What I did do this morning is I did sell some premium. So dollar index. Hey, what do you know? We're going higher. As we thought, as we said, I said, don't fight the dollar. Now that we've cleared this this big like 109.50 to 110 pocket, this dollar is probably still in a nice little trend. We're probably heading down towards parity on euro dollar. Okay, we're at fresh lows today at 102. I mean, I hate trading this thing already only 200 pips off of parity, but I think I kind of have to. I don't have to. I don't have to do anything. But probability of hitting parity at this point is fairly high, I think. Let me check something. Are we oversold? Are we divergent? Let me find out. Let me pull up another workspace here that I have. Let's go harmonics and pivots. So this is another workspace that I use. Let's go to euro dollar. Okay. So euro dollar on a daily time frame is starting to show, not a bad trade there for the old yearly pivot, 106.30. Oversold conditions. We had a little spike there on the euro dollar. We have a big fat pocket all the way down here. Some really nice demand levels from just above parity 1.008 down to like 97. So I could see the euro dollar still pressured to the downside, falling in this zone. This is where I'm looking for the buyers to step back in. Okay. So what am I noticing here? Well, on the daily chart, we have some lower lows in price. We are seeing some disagreement in momentum. We have some lower lows in price. We have some hidden bullish divergence on relative strength. Doesn't mean I want to call the bottom. Okay. Doesn't mean I want to call the bottom. Doesn't mean I want to call the top on DXY. But man, it's getting closer. It's getting way, way, way closer. Weekly chart. Now this is interesting on the weekly chart. We've been heading down on the weekly chart, and we are still heading down with momentum, and we are still heading down with relative strength. The weekly chart might be a little bit more in control with where this thing settles in. So if I'm using an indicator on the weekly chart, I would say that if the weekly chart hits oversold conditions, okay, maybe looking, I didn't mean to do that last one, oversold conditions, maybe looking for that to line up. It still doesn't mean there's a bottom, right? Like we could have oversold conditions. This market might like spike down and then put in a bottom, but just be on the lookout for it. I still like the idea. So I'm probably not going to sell euro dollar right now. Okay. Although I would love to, but I should have been selling it at 105 to go lower. I should have been selling it at 105 targeting parity. And now I'd be deciding, okay, I'm up 300 pips on my position. Do I start protecting profit? That's a much better conversation than should I sell it at 102 to chase the extra 200 pips to parity? I mean, it's okay, but I'd rather wait and see if this thing hits parity and lower. I'd rather start scooping up some some buy orders. I'd rather start scooping up some, demand levels and then see if this thing can come back and find some really good structure at that 105 to 106 handle. That to me is a much better trade. And that's a kind of a topping point in the dollar index. And so I think that's a much better timing trade versus trying to just chase right now. Okay. Meanwhile, dollar CAD, did we hit my profit target? It's right there. It's right there. Let's go. Dollar Swiss. Okay. This one's 9 pips away from my profit target. Hit it today. Hit it this week. I'm ready for dollar Swiss to be done. It's got to be close. Let me set a chart alarm at 92. Dollar Swiss, all positions close for profit. So when that chart alarm goes off, hopefully it goes off this week. Good stuff. All right, what else? Oil. Let's go back to the daily chart. Okay, I'm going to get rid of, let's go back to this workspace here. Oil. Another spike to the upside. This is on geopolitical stuff, OPEC controlling supply and demand, Russia sanctions, oil prices are heading higher. This is certainly with last Friday's candle. That's a more convincing move that the bulls are in control for the time being. Okay, does this make CPI data a little bit stickier? Yep. Right. So, how nasty, how high does oil get? I don't know. If you're long oil, you're happy that you're long. That's it. Like I don't have a trade on oil. I'm not long. I didn't trade CL futures. I did all my trades back here. All my trades on oil were bull call spreads for profit. That's all I did. I'm not in oil right now. I'm just watching to see if oil goes higher, how ugly does inflation get in the US? PPI tomorrow, Wednesday CPI. Look at the calendar for the week. They're all forecasted to be higher. Okay, so let's go to Tuesday's news. Tuesday, 8:30 should be PPI for the US. Here's your forecast. PPI year over year. Look at this big jump. Previous print year over year was 3%. This is showing a forecast of 3.4. Are you freaking kidding me, man? Like that is higher purchasing. What's PPI? Producer Price Index. So you got the PMI numbers, the Purchasing Managers Index. PPI is Producer Price Index. If that is higher, again, just another tip in the cap of higher inflation. Look at CPI or the core PPI year over year. 3.4 is a previous print, forecast at 3.7. Both measures looking higher. So not a good look. Okay, we'll see what that prints this week. Go into Wednesday, 8:30 a.m. You have CPI data. We're looking at core year over year. Previous was 3.3. Forecasted is still 3.3. CPI previous was 2.7. Forecast is 2.9. Again, still looking at a higher move. Not a good look for inflation. Let's go to a third-party inflation measure. We were at 2.93 last week. Now it's up to 3.04. Again, looking like it's going up. Are we going to break these highs? I don't know. We're going to find out. What's the 10-year doing? What's the 10-year yield doing? 10-year yield today is up. Okay. I have seen forecasts with this thing going up as high as about 5.5%. That's not good. I said above 5%, something breaks. We have a look to me, if we're greater than 5%, this is risk off. If we are greater than 5%, something will break. So we could have bond market, we could have major risk off event. That is a big wall of worry, in my opinion. Okay. So how aggressive does the market react to it? I don't know. We're about to find out because it doesn't seem like this is slowing down right now. So just something to be aware of. All right, what else? Oil, gold, silver. Gold. Actually, let's check natural gas. Spike up the fresh highs in natural gas. A lot of volatility. I'm long UNG with basically a longer term diagonal spread. So I bought the $5 call, selling the 23. My break even's around 16.25. So this is an income trade to April. If we get up into the 20s here, I get this called away for like $600 or $700 per contract. We'll see. I'm looking to see like if this inflation stuff and energy price is going. The U.S. right now is one of the biggest suppliers of natural gas to Europe, more so than Russia. So I don't know. I mean, it could be just a supply and demand trade, and also, natural gas for really, I mean, all of like 2023 to now, it's just been making lower prices, lower prices. Look on the daily time frame. This is the first time in a long time that we are now above a 200 moving average. That is a long time, right? Like this thing started into a bear market after topping out in August 2022. We've been in a bear market basically since October 2022. So that is a 2+ year bear market natural gas. And it was just a matter of time where are we going to see price finally start to make a, higher low and higher high. And it's just now happening. So if this is a reversal that's underway, you can see here, there's a lot of potential upside for natural gas. I wouldn't be like crazy bullish on this unless something is breaking in the supply chain. But even for a, 1, 2, 3, 4, 5 wave move coming back into this structure here, somewhere in the 20s. So I mean, if I turn this trade into, I think I'm in like 6 to 10 contracts long, and so if I turn, let's say, what would be that break even? I've got $18. So $18 max profit here, paid $11.25. So that gives me $6.75. So I'll just use a simple number like 10 contracts. So that's $67.50 in profit. $67.50 in profit on about 10 accounts. I mean, that's a good chunk of profit. I don't need price to do anything wild and crazy. I just need price to go up a little bit. So we'll see if it does it. But it's a trade that I've given myself plenty of time. I went out to 2027, but then I'm selling against it something aggressively because the premiums were pretty decent. So we'll see if that's a play. Gold. It looks like gold is red on the day. Red on the day. I'd still like to see, especially if the dollar, this is interesting that gold has stayed bid and dollar's getting stronger. Is this a bit of a fake out trade in gold? Maybe. This could be like little noise. This could be, breaking higher to test the highs again. I'd still love to see gold give me a pull back into here. If this is like range bound gold, I'm good with that. If this is a high, low, lower high to lower low in gold, I'm good with that. But it seems like right now gold is maintaining a pretty good bid price. We did form a higher low right here. Watch that structure. Watch that structure for right now. Okay, if it breaks above the highs, I'm not necessarily adding to new highs on gold. What I might end up doing is taking some GC futures trades to see if we get to higher highs. Otherwise, I think gold is just good to have in the portfolio and stay long. Bitcoin down 2% today, gold's down 1% today. Market's gapped lower. We're actually doing a pretty good job of filling today's gap. It's close. So anyway, keep an eye on gold. I still like silver. Silver's down, but I'm looking at major support around $26. Bitcoin, little spike down to 89.2. Kind of getting bid up right away, but I'm going to keep an eye on this one. I have a measure move, high, low, lower, high, lower, low, measure move to 87. Potentially a little, added volatility down to about 80K, and I'll add more Bitcoin / probably IBIT, most likely. I do have some trades running a micro strategy. We're at 320. I'm going to get it called away, I think the first week of February at 305. And I might maybe this week take a look at this and do another roll. If it pays another, $2, $3, $4, I might just do another roll for another week. Let me see if that, I'll look at it right now. So let me look at MicroStrategy really quickly. MicroStrategy, I have the shares. There's my 305 by 245. And let's see. If I roll this out another week. Oh, no, I'll close this. Okay, so if I roll this again. So the 305 by 245, if I roll it out, nah, I'm not gonna do anything. That's another $2. It's okay, but I'm just gonna try to let this one get called away. It's like $2 grand in profit. I'll let it get called away. All right, coin. See what happens there. Ethereum staying above. It's actually back below $60, so I'm happy that I closed out. Good. I closed out at. I needed price to stay above 60 by literally this Friday. So I had a 117 expiration. It was a 60 by 40 bull put spread. And I collected on that trade like $7.50. I closed this thing out for a 50-cent debit last week. So I still grabbed $7 of profit per contract, and I need a price to stay above 60. Well, right now it's at $59.99. If price goes lower, then I'm running into chewing into my profit and also taking out potential assignment, which I didn't want to do for this. So I'm happy I took the profit. All right, what else? Copper. Copper's up. Interesting. Copper's up, but China's not doing anything. Not to what I saw. Japanese yen still choppy on the Nikkei. Japanese yen. Let me see 6J really quickly. Where's my Japanese yen futures? Starting to show a little bit of strength there. It's not quite at the attractive level I'm willing to throw some trades in it. Let's go DAX. Look for some dynamic support in the German index. FTSE. I don't know if we're going to make all-time highs, but probably range bound. I mean, I think you can see some pretty clear horizontal levels here. So, if it comes down to the lows, tight stop loss. If it comes up to the highs, maybe fade it. If you can trade some options on this one, maybe some iron condors or strangles. Argentina. Hopefully we have it. I'd love to see a topping pattern. I don't want to sell it. I'm just saying, like, pull back here. Little pullback here, find some support, then I'll get long for resumption Argentina long. I'll just dollar cost average into this ETF. China, Brazil, Apple, Mag 7, big gap lower on Apple. Holy shnikes. All right, let me check and see something here. Apple. This week, anything attractive to the upside? Nope. It's all lower right now. Looks like the market's kind of dumping some Mag 7 right now. Amazon heading lower. Wow, Apple's getting dumped hard. Why is Apple so bad? Fresh EU scrutiny over App Store fees. Man, leave it to the EU. So big gaps to the downside on Apple. I would just still look at this one. I put in this trade last week for the Pulver alerts, 210 by 205. Would I take some shares of Apple? Yep. Would I take shares and own them at $198? Yes. So if I owned Apple at 198, I get a 25% discount, 24.5%. I'm totally good with that. Until then, I'll just try to generate some income. Amazon, own some shares, have it collared. Google, just some trades out to March and in May right now for income. Meta, looking to see if we have a little bit more of a pullback into this 200 moving average. Microsoft, positioning for a lot of income down here in the 370 to 375 zone. Netflix, I'd love a bit more of a pullback on Netflix to start establishing some longs, whether it's income trades like a 1-1-1 or either a 1-1-1 or ratio spread, or I just start to throw in like, hey, look, it's at a decent discount. I'm going to throw in $1,000 in Netflix. We're throwing a couple $1,000 in Netflix. If we feel this gap right here, there's two big gaps I'd be watching on Netflix. One is this area, and the other one would be, we'd clearly look like we're in a bear trend, but we'd come all the way back down to this gap here. So if I had area 1 to buy, area 2 to buy, I mean, Netflix has still all the potential in the world to still be a $1,000 stock. Okay. Bistrat, if you're asking about futures and options, one good place to start is if you purchase the Pulver Alerts bundle. I know I have a full course called Practical Options that's included with that purchase. So that's a good place to start. That's 13 of my favorite option strategies. Or you just keep tuning in and you'll just keep hearing me talk. That helps too. NVIDIA 132. I've got it collared at 140 and 130. This one, let me double check. I get a ratio spread on NVIDIA. I've got a collar trade on NVIDIA. Right now, my 100 shares, there's my 130, 140. That's my collar trade. The bearish trade, and this is out to March. And so my look on NVIDIA is this. We have a pretty nice gap to the downside today. If this, fills the gap and it gets called away greater than 140, that's totally fine. I'll make some money on the trade. I think my break even on NVIDIA, let me double check here. NVIDIA break even, 132.14. So if it gets called away, I'll make $7.86 a share, which isn't too shabby. If it goes lower, then I will be looking at using my put to lower the cost basis and then turn to flip this hopefully for, I'd probably, if we get a decent flush lower, then I'm probably going to try to take NVIDIA and flip it for like $10+ a share. Right now, $7.86, not too bad. But if we get another flush lower and I can lower my cost basis, I'll try to flip this for 10, maybe $10, $15. Okay, Tesla 392. Still going to keep an eye on Tesla. I've got some dollar cost average levels in here at 360, 250, and 285. Also have some ratio spreads. Look, right now, if you have a broker that gives you implied volatility, you might look to sell some premium. Tesla's not a bad trade. I might look at another. This is a ratio spread for February. I might look at a ratio spread for March. Let me look at one right now before I go. I've got about 5 minutes before I have to go. Tesla. If I went out to March, so March 21st. Okay, so we'll go 67 days. Could I do something in the, the sub? I mean, anything below 275 is okay. So these aren't bad. So I could do, let's say, a 280 by 275 by 270. I mean, that's not a bad trade. It is a 90% chance of profit, about a 7% chance of assignment. Would I take shares of Tesla at 270? Yep. If I did take shares, would I own it? 270 would be the assignment price, -5, minus 312 or 310. I'd own shares of Tesla at 261. 261 is quite a bit lower. Now, the 200 moving average is around 275 to 280 right now. Income wise, I mean, we do have a gap fill around this like 240 to 2. Yeah, that's not bad. We have a gap fill between like the 245 and 220 zone. So maybe if I bump this down, 277, how about I take a trade for this one's okay. So I get over $2 of income, but a 93% chance of profit, an assignment risk of about 5%, which I've got the capital to take on the assignment. That's not the problem here, but I'm just looking at income. Would I rather make the extra $100 for the trade, or would I rather, take on like the highest probability, take in a little bit less buying power reduction, and still, grab $200 by March 21st? I think I like this trade. So let me see if I can get filled. Hopefully minimum's like 210, but I'm going to try to get like 215 or better. So I like this trade. So I'm going to buy a 265 and sell it. Let me see what this looks like if I do. Okay. So break even here would be about 247. Assign it 255, -5, minus 2.16. 247 and change to be my assignment. If I do a ratio spread, let's see what this ratio spread looks like. If I delete this leg and go up 2 contracts on the 260, I get 245, but my ownership would be 260 -5 minus 2.45, 252 versus 248. I mean, obviously I'd rather own it cheaper if I'm going to own it. So let me take this back down to 1 contract, add in the 255, and that trade's okay by me. So again, 93% chance of profit looks pretty good. Tying up some buying power. Am I willing to own the shares? Yes, I'd own 100 shares. So I'm going to take this trade hopefully for 215. All right, this would be the trade that I'm going to throw in. I'll get it updated in the Pulver alerts for Discord, and then I have to bounce in 2 minutes. Let's see if I can get filled here for let's try 220 at first. So 220 is not filling. Mid price at 217. Fill the 217. That was easy. All right. So I'll get that trade added in. I'm going to throw that into my personal tracker. Then I'll add it into the Pulver alerts So Tesla, and that is a 3/21 expiration. Buy the 265 put, sell the 260 put, and sell the 255 put. Collect the 217 credit. 93% probability of profit. About a 5% assignment risk. And willing to own shares. And the break even on the assignment would be 255 minus 5 minus 2.17, 247.83. Would be if I took on any assignment, I'd own it at 247. There's enough premiums in Tesla that I could lower the cost basis. I would sit on that. I think we're going to be okay. So I like the trade. It's just an income trade at first. If it turns into or evolves into an assignment, I'll take on the shares. I've got the capital for it. All right, so I'll throw it in Pulver alerts. I'll get that in Discord, and I'm going to get this in for a couple other accounts as well. So take this trade, similar order. Let's get this trade in for a couple other accounts. Filled there. And filled on this account here. Cool. All right, so that's in. All right, so that's in. I'll add that into the Pulverless Discord. All right, buddy, I gotta go. Hopefully there's another guest or wrapping it up. I'll see you tomorrow. All right, thanks everybody. See you, bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.